Kusama, the wave 2 low did not hold, so we need to reevaluate. Remember, it's great to have an opinion of the market, but it's not a fixed opinion. We need to take the information and make objective decisions. So today what we're going to do, blank canvas. We're going to look at Kusama from a macro, intermediate, micro picture. So we see what's happening on a larger scale, months and years. And then we're going to dive into the next few months and then really what's likely to happen in the next few weeks. So if you like today's video, like, subscribe, hit the bell notification. If you haven't already, take my free crypto trading masterclass because it covers Elliott Wave theory. And that's one of the 3 secrets. And it allows you to understand what we're talking about. And if you don't know me by now, I'm Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. And also featured in this best-selling book back in 2008. High Probability Trading Strategies. Awesome book, awesome book. But I want to bring that knowledge and wisdom because I've been trading currencies for 15 years now and I love crypto. I want to bring that knowledge and wisdom to the crypto markets. Do me a favor. I'm looking to get to 1,000 subscribers in June. I think we're around 450 now, give or take. If you can help me, share this. If it's valuable to you, like, subscribe. Really, really appreciate it because I can bring more and more value to you, but also share. But let's jump straight into Kusama. Right, macro picture. We're going to keep it sharp today. Really, really sharp. So I'm going to make some notes on the chart so I can keep it really clean. First, we're going to look at the macro picture, macro. And then we're going to look at the intermediate, and then we're going to look at the micro picture, right? We're going to look at all 3 areas. And this is going to allow us to have a really clear opinion, not a fixed opinion, but allowing us to make really high probability decisions based on the market. So what's the macro picture? Now that we've made this new low and it closed below this new low the last few days, and it's been quite deep, now we want to reevaluate because it invalidates the previous wave count. And that's just the life of a trader and investor. Anything can happen and that's just the nature of it. But we just want the probability. So macro picture, we got to move up, we got to move down, right? That's the macro picture. How do we label that? Well, quite simply, and remember, Elliott Waves measures the psychology of the market. Where's the psychology at? So it looks like we made a nice wave 1. Let's make it nice and big as we can. Boom. Up here, and on the macro we are on a wave 2. Now we're going to put a question mark because this wave 2 is still forming on a macro scale, right? So we've got a nice big move up, big move down. Boom. So what do we write here in the macro? Let's double click and we say macro is a wave 2, right? Make sense? Right, this is big time, right? This is really, really powerful, strong information because it's going to give you confidence. Because a lot of you are asking me, should I sell my Kusama? Should I buy more Kusama? Should I sell the dip? Should I buy the dip? What should I do? Geez, I bought at 400. It's currently at, 195? That's like 50% drawdown. Look, so this information is going to help you make an objective, non-emotional decision. But ultimately, you must make that decision based on your objective, your trade plan, your investment plan, and how... are you looking at short term? Or are you looking at the longer term? Because we all know, and if you don't know, Kusama is a powerhouse project. But short term is based on voting. Short term is voting. And how do people place their votes? Buying and selling. And when people panic, especially with Bitcoin price coming down, panics the market, we will see more selling than buying. And that's just the nature of the game that we're in. So we got macro picture. Wave 2. Now we're going to go into the intermediate level. What does that mean? Well, this wave 1 breaks down into micro waves of a lesser degree. And we're going to go 1 degree down. This wave 2 breaks down to waves of lesser degrees. And this can give us very valuable information. So I want to make it clear to you because I want you to become, you don't need to become a professional in this, but so you understand it. Look, we've got this move up, right? Wave 1. We're looking at a move down. Wave 2. We're looking at the next move up. Wave 3 here. Wave 3, we got another move down here, wave 4, and then we got another move up, wave 5. So now we can label those out. We can go, right, that's what it looks like it's happening on a intermediate, right? 1 degree less than the whole wave 1. This is powerful, valuable information because it gives us insights into the psychology on how the mass herd, the globe, the universe, not the universe, the globe, Earth, planet Earth, everyone is participating in Kusama right now, how they're feeling. So we go 1, 2, we can say here or here, it doesn't matter too much, 2, 3, 4, and then it looks like a 5, right? 5. Now we didn't see that, we still had a slightly different count before, but want to just change this to an intermediate. We'll keep the wave off actually, so we're an intermediate count, right? But now that we've had this new information down here, it changes the psychology of the market. It goes, oh, actually, we're probably at a different phase of the market than I originally anticipated. So now we want to keep on the intermediate because we've got some intermediate counts here. What's the typical medium or anticipation for a wave 2? Well, there's a minimum of 3 waves. So it looks like at the beginning here, we've got a nice clean wave A. It's very impulsive on the way down. This is more corrective, even though they're not overlapping. But now that we've got this new close down here, it looks like an ABC of a wave 2. So we're coming towards an end. So now, what part of the intermediate count are we on? Well, the intermediate part, we're on this part here. This part here, you see that? Let me just make it really, really clear. The intermediate part, we're down here. Let me just turn this off. Well, we're down there, this wave C. So what do we write up here? On the intermediate count, we're on the wave C of the wave 2. And that's how that's one of the easiest ways to denote the count. A wave C of a wave 2, a wave C of a wave 2. That's the intermediate count. Really, really powerful stuff. And now what we want to do is, in fact, we're not going to go into, actually we might go into the micro. Let's put the micro on pause for a second, because this is valuable, because Kusama's not been out for that long, right? It's only been out, well, we've only got data from this particular chart from February 2020. When did it come out? Let's just check on CoinMarketCap. Kusama, when did Kusama come out? Let's just close that. Kusama KSM. This CoinMarketCap gives us valuable information, gives us like the whole data. Kusama came out, yeah, December 2019, give or take. Right, December 2019, give or take. Let me just pop back into Kusama. December, so you can tell this on this data, it only got listed on KuCoin from February 2020. So that's why there's 3 months of data missing. So it's only been out since, what, a couple of years, if that. So we want to now just do a macro and intermediate wave count. We've got 2 really clean wave counts. A wave 1, wave 2, and an ABC. So where does the typical wave C end? Well, first we want to look at a retracement, right? Most typical is going to be a minimum of 50%. In fact, I'm going to do it like this. I'm going to do it over here so it's cleaner. I'm just going to make sure on the left-hand side it marries up. And then we're going to go take this high. And we got 3 levels that we want to pay attention to. The typical minimum correction is 50%. The wave A surpassed that, and we're surpassed that right now, so we can get rid of that. We'll just keep the data nice and clean. And then we should expect a correction for a wave C to finish between a 62% and 78.6% retracement. That's the most common typical corrections for a wave 2. Right, and now we're going to zoom in a bit more, and we're going to focus a bit more just on the wave ABC itself, right? So there's a few really key price points because we want to cluster. This is a retracement, which is one thing most people don't realize, because if you don't know Elliott Wave, that the relationship of wave 1 and wave C, so wave A and wave C, they have a really direct relationship. And more often than not, wave C is like a twin to wave A in terms of it's the same price, it's price movement. And you can see it's banging that zone, banging that zone. Oh, let me just, I just want to change the metrics. The minimum tends to be 62%, but we're way past that 62%, so we don't need that. And 1.618, but the real key number is the 100%, and we see we're really close to that 100%. That's valuable information for us to say we're at or near or very near a wave C of a wave 2 low. Right, that's valuable information. That's gonna be helpful for you, because if you're asking me the question, should I buy the dip? Should I just hold? Should I just sell everything and liquidate and just take a loss? Well, now you can make an objective decision going, right, if this wave 2 unfolds, we know what comes after a wave 2 is a wave 3, which is new all-time highs, right? And that's what we want to be aware of, want to be really, really aware of. So what other confirmation retracements are there? Well, there's the external retracement, which is, this is very important. The external retracement of a wave B helps us see where a wave C is likely to end. And the 2 typical numbers is the 1.272 and 1.618, right? So now we've got this real cluster zones here. Right, we've got this whole zone to say there's a cluster of prices that's telling us a lot of information. So we've got the macro retracement of a wave 1 to a wave 2. We've got the intermediate cluster now of saying a wave C measured against the wave A. Is there anything else? Boom, we're going to do one more. 2 things actually. Let's do 2 things. Typically, actually, I'm just going to keep it focused on the price. Let's keep it focused on the price. What we're going to do to finish up is, let's keep this notes over here. I'm going to put them over here. I'm going to zoom in like this, bump, 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 like this. We're going to now, the wave count on here is not that clean, right? I mean, it's kind of like a clear 1, 2. Like on the wave A, it was really clean. Look at this: 1, 2, 3, 4, 5. That's a micro. Here, it's like an A, B, C, D, E. Right now, in hindsight, that was in hindsight because they're not overlapping waves. That wasn't very obvious, but in hindsight, is now obvious. Here, it's looking like a 1, 2, maybe a 3, 4, and a 5, but it's not that obvious. So what I'm going to do to finish up today is to jump into a 4-hour chart, and we'll see if we can see a microwave count so we can really kind of fine tune the high probability end of a wave C of a wave 2, because that's what it's looking like, very, very likely. So if you like today's video, by the way, like, subscribe. I'm looking to get to 1,000 subscribers. Help me out so I can help you out more, and share the video. Anyone that you know is buying Kusama, involved in Polkadot, taking out crowd loans, they might be concerned because if you're taking a crowd loan and you're loaning out your Kusama to get some Moon River and some of the other projects that they're doing, you might be concerned that your underlying token is depreciating in price. But if you go, hang on, it looks like we're actually coming towards an end of a wave C, of a wave 2, and if that holds and it comes true, which is high probability, then we can anticipate Kusama eventually getting to $1,000. So now let's just finish up with 2 more things. One thing is going to be the 4-hour chart. So firstly, the 4-hour chart. Right, I'm going to keep it on a line chart so we'll get consistency. And let's just get rid of the indicator for now. And let's just focus on this part. So here's that last part of the movement. So here it's really clear that we can see there's a nice wave. I'm going to draw it like this. Doo-dum. We're going to go, it looks like a nice wave 1 down, a nice wave 2. Then it's got a nice aggressive move down. Likelihood that it's going to be a wave 3, wave 4, and then we're coming towards a wave 5. Right, I'm just going to move it like this so the C is below the 5. It's like this. Right, a couple of things that we can confirm. Is this likely to be the wave 3? Well, a typical wave 3 is 1.618, and the maximum is a 2.618. That's the typical ranges of a wave C. So this is not that's not that far off. And here it looks like a 1, 2, 3, 4, 5. So it's likely that this might be a wave 3 and a wave 4, and this are not too dissimilar. I'm just making my opinion. Let me just get some help from the daily indicator, because here look, Elliott waves. The reason why most people don't use Elliott waves is because there's an element of business decision making. It's not as black and white. The price projections are quite clean and clear to make when it comes to Fibonacci, but with Elliott wave you have to be a bit subjective and go, right, what does it look like? And then we have to make a decision. So I just want to look at the daily indicator. You can see that these lows are marrying up nicely with this indicator, and we are at this low, so the downside movement should be limited. The blue hasn't crossed the red yet, so we should be close towards an end. And the reason I'm looking at that is if we were very far off the end on the indicator perspective, then we'll have likelihood more downside movement. But actually it looks like this is the the wave 3. Yeah, that's going to be the highest probability. So we can go wave 3, wave 4, and wave 5. So what does this allow us to do now? Well, what it allows us to do now is to make a final, just a micro degree. So I'm going to pull these notes down here if I can. Pull these here. Is to say we look like we are now on the wave 5 of the wave C on the intermediate of the wave 2 on the macro picture. Right, this is valuable information. So now we can do our price projections of a likely, if this is a wave 3 and a wave 4, where with a wave 5, what's the high probability price zone that it will typically end? Well, if we just take the high of the beginning of the wave 1, measure it down to the wave 3, project it forward from a wave 4, the typical is 62%. And you can see that's right there in this cluster zone, and the maximum, typical maximum is 100%, which is down here. We want to be aware of both of these, and if it doesn't hold here, it will typically go down to the next price zone. Right, so we've got 2 really clean zones over here. There's a few other pieces of information that's really valuable to us, which is wave 1 and wave 5 have a really close relationship to each other. I'm going to do it like this so it's cleaner. I'm going to take the same price projection, but I'm going to take it from over here because it keeps the chart cleaner and it's easier to see. Yeah, perfect. perfect. And the two numbers that I really want is wave 5 is often the same as wave 1, and the maximum is 1.618. So you can see that we've got this zone over here. So now we've got a high probability price cluster on 3 degrees. We've got a macro count, the what was it? It was the 62% to the 78.6% retracement, but it's quite broad. So it's in this region. Then we've got the intermediate count, which is the 100% of the wave A projected from a wave C and a few other external retracements. But now on a micro count, we've got these two clusters here. So now we've got a narrow degree zone saying a wave 5, a high probability zone of a wave 5 is this region here. We haven't done time analysis today, so I might need to do some time analysis. That takes a bit longer. Well, there's some basic time analysis we can do. Let's do the basic one, which is quite fast, but then there's some more advanced one which we can do. But the key things to take into account is the weekly momentum is oversold. So the downside movement on a weekly should be limited. We got a pattern of a wave 5 of a wave C of a wave 2. That's really, really clear. We've got price clusters on 3 degrees of count, and a macro, intermediate, and a micro. And then we're going to do some basic. The basic time is wave C and wave A have a really direct relationship. More often than not, wave C is 100% to 1.618 in terms of time of wave A. So 100% is here. Let's just make that into a red, or green would be the minimum. Let's keep it green. And then 1.618, which will make us red as the typical maximum. So now one of the, just some basic time retracements and extensions we've done is here. We go, right, we got this zone, this time zone, and we're obviously past here. So anytime between now and the 24th of June, which is 2 days, we may see the low made in Kusama. Also keeping in mind that this indicator, look at this low and this low coincides, this low and this low coincides. So this indicator from the recent momentum cycles of the market picks up the lows quite well. So the very fact that we're very oversold, all it takes is 1 or 2 bars on the upside and we should complete potentially a wave 5 of a wave C of a wave 2. And then what should we anticipate next? It's not guaranteed, guys. So this is why you want to have proper risk management. So you don't want to be overly aggressive, even when the chart pattern looks as clean and clear as this. This is like textbook stuff. This is proper textbook stuff. Is a 1, 2, 3, 4, 5 of a 1 and ABC. Look how clean this ABC is. A very, very clean ABC now. But now we're it's a leading indicator where we're projecting in advance what's likely to occur, and we've got a nice tight time and price momentum and pattern zone over here. And if this holds, what we should anticipate is that this wave 1 high gets exceeded and that the market will then move. But rather than projecting what numbers it will move to, let's just be patient. And if it does this, then we can project what's likely to occur. But a wave 3 tends to be the most bullish. So overall, Kusama is still looking very, very healthy. Went lower than anticipated, but that's just the nature of the markets. But now we're coming up to a wave 5 of a wave C of a wave 2. It's 3 degrees of counts. So there you have it. A real clear opinion, which we're flexible with based on new information, because we're not in the business of being right, we're in the business of making money. And that's really, really important. So if you liked today's video, like, subscribe, hit the bell notification, share this video. Please, please, please help me get to 1,000. I think we're on 450 today. We've only been doing videos for like 5 weeks. So we've got to now 450. So I appreciate you. So it's also awesome. Second quote today, not second quote today, but second quote from this book, The Richest Man in Babylon, one of my old school books I actually bought like 10, 15 years ago. I'm going to read it. Very simple. It's got some wisdom in there. Wisdom, old school, in the Babylonian era, right? Better a little caution than a great regret. Better a little caution than a great regret. When it comes to risk management, it's like, look, anything can happen in the markets. We don't know. We just go with high probability. So approach the markets with caution. Only invest what you can afford to lose and apply proper risk management, whether you're buying the underlying token, whether you're trading with a stop loss, whatever it is, make sure your trade plan is written out, your business plan is written out ideally, and then just execute that plan. All right, see you soon.